Remember when I told you to wait and see about that new tax law? Well, the wait is over. On July 4th, President Trump signed the One Big Beautiful Bill. And guess what? For once, Washington actually handed small business owners a win. So let's unpack that good stuff, fast, plain English, no fluff. So I want to focus today on the 5 biggest impact for small businesses. 100 bonus depreciation and Section 179, the R&D full expensing, the SALT cap increase, the PTET workaround, and the QPI 20% deduction made permanent. So I want you to think about this big beautiful bill in 5 different tones. This bill flips 5 money switches that sets the tone for your cash flow. Think about it that way. Instant write-off, 1 year. Buy today, deducted today, no waiting. The RT goes from 0 to 60. Expenses 100% now. Grab it. Retro refunds for 2022, 2023. 3. SALT cap jumps to $40,000 from $10,000. So finally, more of your state tax counts. The PTET for your pass-through entity stays alive. It's a clever workaround when the cap isn't enough. And the QPI is 20% still alive. It's a deduction. Now it's locked up in your automatic haircut on pass-through profit, never sunset. Now it's permanent. All right, so let's talk about bonus depreciation and Section 179. Let's talk about the shiny toys, equipment, vehicles, softwares. Bonus depreciation was set to a lower limit with old rules, set to be 60% under the old rules for TCJA. But now it's 100% forever. It became permanent. So if you buy a machine for $100,000, you can deduct whole $100,000 this year. Section 179, the limit now jumps to $2.5 million. Start phasing out at $4 million indexed to inflation. So what does that mean to you? It means that if you need trucks, laptops, pizza oven, bulldozers, 2025 is your year. Cash flow loves big deductions. And also, bank loved healthy cash flow. So, quick tips here. Don't buy junk just for write-off. Only buy things that trigger asset actually makes money. Now, let's talk about the R&D gold rush, or what I call it, the nerd money. Research and development isn't just for Silicon Valley. It covers new recipes, new prototype, process improvement, custom software, or breakthrough green buildings techniques for your new real estate projects. Under the old rules, you had to spread those costs over 5 years, and that's painful. But the One Big Beautiful Bill now flips the switch. So full expensing in the year you spend it, and the credit is permanent. But wait, there's more. If the revenue is under $31 million, and that's most of us, you can actually pop the trunk for 22 and 2023 tax return. And if you claim those R&D tax credit, you had to go back and amend those return and collect the refund. That's awesome. So your action plan right now is you dig in invoices for product testing, engineers, contract developers, anything that you wrote off for innovation for 22-23. You call your CPA, you look at those return, review them, and you see if you claim any R&D tax credit for those years, you go back and amend those return and get that money back. All right, now let's talk about the SALT tax shakeup. Something salter, it's called the SALT local taxes. Now, since 2018, you could only write off up to $10,000 of state and local taxes. And I'm sure every business owner here in California felt that burn. But the One Big Beautiful Bill turns that cap to $40,000 plus 1% annual bump until 2029. Then it snaps back to $10,000 in 2030. You can use it until it's not there. So heads up, if your modified adjusted gross income is over $500,000, once you reach that $500,000, the deduction scales down, but it doesn't vanish. So it's still better than nothing. Now, related to the SALT cap, let's talk about the PTET workaround. You remember, if you are an LLC or S Corp and you already pays that pass-through entity tax at the company level to dodge the SOL cap, keep doing it. Don't stop. Because rule didn't change, but run the math first before you do that this year, because higher $40,000 cap might be the PTET fee in some cases. Okay, so here's your quick win to tackle this week. Number one, round up any RD receipts and put them in a folder on your computer. Dig through your 22-23 for any invoice tied to either testing, coding, prototype. Stick them into one folder or create a folder on your computer, because the refunds start here, and give them to your CPA. Number two, you need to write your gear list. You need either truck, laptop, or forklift this year. Noted, buy sooner, deducted sooner. Number three, review pay perks. So the bigger write-up can fund raises, new tools, and the crew truck that you keep eyeing. You need to keep that list and you need to buy it sooner. Then you need to call your CPA, book that 20 minutes chat, because paperwork beats procrastination every time. Don't wait until December 31st. Don't even wait until year end, because you need to start shopping and you need to know exactly how much your gear list right now, how much your fixed asset that you need to buy right now before year end. The sooner you lock these in right now, you'll be miles ahead when tax season rolls around. If you found this helpful, please like and subscribe to stay updated with our new content. Thank you very much for watching, and I look forward to seeing you in the next video.
This has been another episode of our tax saving video series. If you enjoyed this video, please like it, subscribe below, and share with other business owners. You can find previous episodes and more information at www.bostacpa.com. Thanks for listening, and have a great day.